after more than 2 years of tensions, the U.S. and China signed a Phase 1 deal in the past week, adding much relief for global markets. For more on what this deal will now mean for tariffs and an outlook of what lies ahead is Ryan Patel, a global business executive and senior fellow at Drucker School of Management. Ryan, thanks so much for your time. Would you say that we are out of the woods as a global economy by way of how China and the US do business and make peace going forward as a result of the signing of this much anticipated deal?
Well, I wouldn't say we're out of the woods yet. To say we're in kumbaya and to be able to think it's all over, I would use this as an example of maybe using as a band-aid, right? When there's a rift and there's a problem, or if you have a cut on your hand, you put a band-aid on it to be able to hopefully heal the wound, and that's what China and the U.S. did. They both, in the last 2 years, going back and forth with tariffs, retaliatory things, and they realized, both of them did, that they needed to come to the table to have some kind of short-term agreement. And that's what phase one was all about. Phase one wasn't supposed to solve all the problems, because it doesn't. It just provides a little bit of good faith, with China buying more goods from the US wanting to have some kind of trade protection and some technology for its tech companies to be able to open it up to go into China. And I think when that just kind of sets it up to go to phase two, is what they've kind of talked about, what President Trump has sometime after November, to go into more of the details. So is this a good thing? Yes, that they're not going back and forth and that there is some kind of truce. But let's be really clear, this could all end tomorrow should either side just choose to not like what is going on with each other's foreign policy. For example, this is not a deal that is set in stone, but just more of a guideline.
And exactly what is your understanding of the details of phase one and how it will work for US and Chinese companies?
Yeah, the tariffs, at least the basic tariffs, are still there, just to provide to keep each other countries honest. But when you look at what it really means for tech companies, specifically even financial insurance companies for the U.S., it means that you can go into China, and not at least the way the language is written, your copyright, your patents are protected. You have some kind of recourse that is not going to get copied, to be able to go into the Chinese market, and it's going to be more open. And as for agricultural agricultural companies in the U.S., for example, they are going to be expected for Chinese to buy more goods, $200 million of goods, and that includes not just agricultural, manufacturing, technology, which allows China the supply it needs to at a pretty good cost. So the idea for tech companies is to continue to do more business in China, because there's opportunity, and allows China to open the doors and make it a lot more easier than it has been over the last 2 years.
I see that pork markets, or the pork market specifically, is likely to be a big winner in this trade truce. But where does this deal leave emerging markets, particularly those in Africa?
Yeah, I think it actually doesn't change as much. You kind of led the question of the segment about what does this mean for global economy. Other emerging markets shouldn't stop, right? They should continue to do what China has been doing in Southeast Asia, and specifically in Africa. In the last year, their exports to Africa has increased, and they're looking to still be able to get more goods back as a superpower. So let's be clear on this. China and the U.S., China is using this as a strategic competition. They still want to be the number one in the world. And to do that, they're going to need trading partners, and these built resources that they've done in Africa. Obviously, China has spent a lot of money in South Africa and infrastructure and energy spending. Like, this is not going to change. I actually think it's going to ramp up. And that is to decouple its reliance on the U.S. in the future, just not right now in the short term, as they need the U.S. as a trading partner right now.
We have seen, in terms of economic growth of the two countries, the U.S. economy last year showing a lot more resilience than many expected. On the the other side, the Chinese economy slowing. 6% great growth, but certainly not the strong numbers that we have seen out of that region in recent years. What is your outlook then for growth in these two countries as a result of the easing of trade tensions?
I think they're going to stable. I think that's the goal for both these economies is to continue to stay stable. To for like you mentioned, 6% isn't bad for China, but it's not 9 and 10% what it used to do. And China needs to have a stability growth. They can't keep going in a comparative negative over the next few years, and that's what this trade deal kind of helps establish. Can they stay at 6% and not drop down? And for the U.S., obviously, it's and can they stay in the 3% growth, right? And to continue, I mean, they're not. The U.S. economy isn't going to get to 7 to 8%, but needs to show a positive clip that is growing year over year that provides the markets and emerging markets specifically this kind of stability that there is this growth here and there isn't that panic. So I think this trade deal, should it stand still and not have any hiccups, is a positive thing for both countries, that they can kind of build a further foundation while both economies continue to evolve, mind you, when it comes to manufacturing and other places where they typically are not used to getting their money. They are needing to kind of grow that market.
You mentioned a point that many have been talking about. Should it hold? Should this trade deal stand still? And I'd like to ask your views on whether it will hold. Just looking at some of the commentary, of about 50% of people, or people think that there's a 50% chance that this deal could fold in a year. How are you seeing the probabilities here of the Chinese and Americans sticking to this deal and sticking to it long enough to form a new deal in the second leg?
Well, when you talk about rationality over the last 2 years about this, it's kind of hard to predict on what is going to happen, because it's irrational to a certain degree. But what I can tell you, in the U.S. we've got a big presidential election in November. Like I see nothing hopefully changing up to that point, and I feel that this is a political piece, a foreign policy piece between both countries, that this deal comes apart should the political relations between both countries go either or. So what I'm saying is that the economy may not even have anything to do with why this trade deal doesn't happen, why it doesn't continue to move forward. It could be because of the tense relations, and that's kind of hard to predict, especially when it comes to in a year from now, when there is a lot of different things in the world going on in Southeast Asia that the U.S. has some interest behind too. So I think it's very interesting, because should you have the same administration in November or a different administration in November for the U.S., does that change this trade deal and immediately change kind of what they're doing forward? So we may be seeing a lot of changes or no changes here in the next 6 months.
And I mean, bets on whether we will have a continuation of the current administration or a new administration come November, as in will Trump win or not? Where are you sitting on that side of the argument? And, do you think that perhaps him signing this deal at this timeless moment is something that could help his re-election?
Oh, this is a deal that was one of his campaign promises. This is a huge piece. This is a win for the Republican Party and the Trump administration, without doubt, because they needed something like this. And the timing of this obviously happened this year and, in January. So you couldn't have timed it better for him going into the political season. As for predicting on what's going to happen with I mean, the U.S. political landscape is amazing. It's just amazing how it's changed over the last 4 years, 6 years, about who's leading, who's going to be able to run against him in the Democratic Party. So I don't know who's a clear winner yet. We're going to find out real clarity by March, at least, to be able to see who will attack the administration on the business perspective, because President Trump has made it very clear and has said his open administration that he is a business deal president, and so someone on the Democratic side will have to be able to attack that acumen and ability, especially around now talks about trade deals.
And just, lastly, as we have this conversation around trade and deals there, I see that there's less nervousness around the US's trade agreements with the EU, which were also becoming quite a risk there on the cards. Just your outlook for the relations between those two economic regions, and whether we will continue to have the allayed concerns as we are seeing right now.
Yeah, and it's funny. We live in a global economy where we all, let's be very clear. Each region needs each other. And I think when you see some tense between the EU and the U.S. and other places, it does have a trickle down effect, as we've seen this, and puts everybody at at worries. And when you have a stable deal that's made between the two largest economies, you're hoping that the rest of the groundwork is laid down. And with Brexit, obviously now that being situating itself, and then the EU, people can now start moving toward the actual trade plans and partners. I think what we saw last year was a lot of different regions, including the EU, wasn't really sure what they were going to do with different types of deals. And now for the US, it's super clear, at least to me, what they need to do to continue to grow the economy and to be able to continue to, um, compete with China, because that's what they're going to need to do, even with the trade deal, is to be able to strengthen their relationships in other parts of the world. And you mentioned this before. I want to repeat this. You can't underestimate Africa as an economy as a whole. The growth potential, which is there, the infrastructure, the great labor pool, and the mines that are in the country. You talk about double-digit growth and opportunities for multiple regions to partner. This is the time I think people need to put a spotlight back there.
Except, I mean, I think, would you agree to say that China has had quite a first mover advantage when it comes to doing business or doing more business with the continent? And I'm just interested in your views on potential partnerships with the US in Africa, or whether they'll continue to stay the road alone as they largely have been doing.
Yeah, no, you are 100% right. China is a first advantage mover in Africa. I mean, you even see the other one of the top economies in the world, in India in itself, moving to doing same kind of partnerships. You can see them going head to head. And yeah, you're right. The U.S., for whatever the reason, over the last few years, has decided not to make that a priority. And I think that's a miss when you talk about an inclusive global economy where you're looking for all different types of resources. And when you have a first advantage mover, you're able to get tied into the economy a lot more quicker. And I don't know. I think it's a very interesting move by the U.S. Not to say that they don't want to trade with Africa, but I mean they put their priorities at different places, and it's super clear to me and the rest of the world when you have BRICS summit and China continue to pour into investments. It really it speaks volumes, right? It's not just about rhetoric. They're really spending money around there, and so I think that shows that there's not just potential, but there's an actual return, and that's the difference, right? This is the continent isn't about well, let's hope that there's going to be a return. There is an actual return with what's going on.
Right. Ryan, thanks much for your time and for your insights. That was Ryan Patel, a global business executive and senior fellow at the Drucker School of Management.